The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon, folks. Welcome to the April 2nd, the Thirsty Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hey, let's make sure we have an extraordinary one. And the easiest way to do that is to always remember that life is happening for us, not to us. That's right. We do not make that one little 2x4 shift. It means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We're going to go figure out what the bulls and the bears, what those buyers and sellers are communicating to you and I just past 1 o'clock in the afternoon. Sorry, folks, I'm laughing and smiling because I was just thinking somebody sent me I was just remembering the image of a wall in New York that had printed on it that everything happens for us, or somebody wrote down, I get it that everything happens for us, but what the blank, basically. And so I was just reminded of it, and it kind of, I couldn't get it out of my mind, making it a little more difficult for me to keep with my little opening segment. But here's the deal. Here's the most important thing. During this next 60 minutes, I'm here to serve you. So feel free to pick up that phone. You can dial on in at 877-927-6648. If you can't call in, you can always send me an email, steve@tfnn.com. Inside that subject heading, please put radio show question in our Tiger's Den. Well, any ping will do. So let's go ahead and get this show started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to Lush Show. Right now, we got all the indices in the green. Dow's up 1.5% or 328 points. 1 3/4% for the S&P, 43 points. The Nasdaq up 1.5%, 105. 1 3/10 in the Russell, 14 points. Semi's up over 2%, nearly $30. New York Stock Exchange up nearly 2%, 187 points out there. Goldilocks up $44, nearly 3%. Light sweet crude up $4.50, 22%. Big percentage move to the upside. Let's not get caught up into percentages and dollar moves out here. Instead, let's go understand where support and resistance is. That's the way we need to be taking a look at these markets out here. Let's not spend any time looking at the dollar amounts. The dollar amounts, quite frankly, are irrelevant. The only relevance is whether or not price is taking out support or resistance, or whether it's trading sideways. And that's certainly one of the things that we're going to do and take a look at out here. Leading the charge to the upside out here, Equinix, EQIX, up $18 or 3%. Transdigm Group up 19.7%. BlackRock up $17 or 4%. Google 1.5%, $15. Shopify down $37, nearly 10%. You've got Luckin, not too Luck. I think they're going to have to change their name to Bad Luckin Coffee. Down at 680, down 74%. That's $20 out there. Zoom Video off 13 or 10%. So plenty for us to look at. Of course, I want to look at what you want to look at. The first request was to take a look at light sweet crude. That's for Brent in California. And so Brent, here we've got just right now, and we'll take a look at a bunch of different time frames for you. Let's actually do that. Let's do that. Let me just switch right over here, and let's go take a look at hourly. So the 60-minute, the 240-minute, the daily, and the weekly time frame out here. Those are the charts that are showing up on our screen. Now, the key today, what light sweet crude has done is it got up to where it should have before it found some resistance, and that is the center of its box out here, $26.99. Granted, price got a little bit over that. That's okay, but the question is, where does it close? Does that level get rejected out there? Now, the profile that we're looking at, that's panel 2 from the right out here, bullish in structure. And so, Brent, if price could close above $26.99, not $27, but you kind of know what I mean, then you could see a run up into the 35.08 level. But before we get up to 35.08, the weekly time frame chart here shows 33.49 as the level of resistance. Should you jump on the band? So it's possible that we've just seen the pop for light sweet crude. At least that's what the daily time frame chart is communicating to you and I. The daily time frame chart, as I pull over one of my other tools out here, we can see that price is moving lower, doing less relative energy. I don't have the bullish reversal candle here to call that a bottom. If we're looking from a Japanese candlestick standpoint, where is resistance? It would be this little bear sash candle that formed out here. Let's open this up. This is on the trading session of March the 20th. That would say that resistance would be its high. Its high, by the way, is 28.49. So price would need to close above that to suggest that price would start making a run for the gap. So that's what that time frame chart shows us. That's the daily. Let's go take a look at the weekly time frame chart for light sweet crude. In this case here, we need to really see tomorrow's close. But what today's, if we just take a look at today's candle session, excuse me, we've got a bullish reversal signal at the completion of a large 1 to 1.272 A to B equals CD pattern. Now, it's also a key reversal session. So as long as light sweet crude closes up by 1 penny come tomorrow, you have the bullish reversal candle of the buy, the D point for its intermediate term time frame. And that would then suggest that price would be gunning for Stevie's red line, which is currently priced out at 37.65. Now, this pattern here that we're seeing in light sweet crude is matching in essence, the exact same patterns in most of the cash indices from last week. They've all confirmed a to B equals CD to the downside with last week's bullish reversal candle. Light sweet crude just simply 1 week behind. Now, if this is really going to get some traction, price on that daily time frame, Brett, must close above the center of that box. And I would have to say really above the high of that bear sash candle to give you the warm fuzzies that price wants to make a run for that 35.08 level. Monthly time frame chart here for light sweet crude. What do we have? Not much. No sign of a bottom when I take a look at the monthly time frame chart out here. And if we go take a look at just some intraday charts, let's look at the 5-hour chart. 5-hour chart, this next session closes at 2 p.m. and its price is trading at 24.74. So if 47 minutes from now, light sweet crude closes the 5-hour bar below 24.09, well, then what you know is a real key level of resistance held. That was its breakdown area, 24.09. Likewise, if price is able to close above that, I don't have any kind of topping signal. We do have a bottoming signal, Rhodes momentum indicator bottom pattern on the 5-hour time frame chart out here. And if price can close above 24.09, you already know where the other resistance is on the daily time frame. If those levels could be cleared, your next level of resistance here is 30.61. It's TD 9 count pattern out there. The only thing left to take a look at, of course, we can look at all kinds of time frames, but the only other time frame really that I've got easily accessible right now would be that 30-minute time frame. See what its message is when light sweet crude bottomed back here in the early part of yesterday. Was it yesterday morning? What time was it? It was 11 o'clock yesterday morning. It was with wave number 7. That is letter G on my screen out here, and that was right at support, 2003. Remember these lines. Understanding support and resistance, folks. Right now, in today's day and time frame, there's nothing more important than that. Learn this TD 9 count pattern. Geez, I teach it to you. Just go sign up for Mastering Probability for 30 days or less out there, and it's free, and you'll learn a tool that will last a lifetime. A lifetime. Okay.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. TFNN is launching an open house for our Tiger's Den. For a limited time, you can get a 30-day free trial to the Tiger's Den. Just enter promo code OPEN at checkout and pay nothing for 30 days while you try out your Tiger's Den membership as part of our open house. With market volatility at an all-time high and people all over the world working from home if possible, TFNN is hosting an open house in our Tiger's Den. The Tiger's Den is an interactive chat room that runs all day where other tigers and tigresses discuss trading ideas with the hosts and members, along with charts and current market news, as well as live access to the charts the hosts use during their programs. Join us for the Tiger's Den Open House. Begin your Den membership today by just entering OPEN at checkout and pay nothing while you try things out for 30 days. For all the details and to start your Den membership today, visit the front page of TFNN.com. Don't miss out on the TFNN Tiger's Den Open House taking place now. Sign up today.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So I've been asked to take a look at the equity futures, the ES Mini, and so forth out here. So let's begin by doing a little bit of a market analyzation out here. So we've got four different time frame. Well, I'm sorry. We have each of the four equity futures contracts for their 30-minute time frame out here. Remember, when we began the show, I said ignore the dollar amounts, ignore the price movements. It doesn't matter to me whether the market's up 500 points in the S&P or 50 points in the 500 points in the Dow and 50 points in the S&P. All that stuff in the percentage, it doesn't matter. That doesn't matter. What did I say? It doesn't matter. What matters is understanding where support and resistance is. So in looking at this chart out here, the four equity futures contracts for their 30-minute time frame, what is the most significant level of resistance out here that has been attacked since about, started being attacked last night and then again at about 5:30 this morning or, I can't remember exact time it was. No, it was earlier this morning. But which of these, when you take a look at these, you got the ES at the top, the NQ after that, the Dow below that, then you've got the Russell 2000. The green lines on this chart represent the TD 9-count breakdown levels simply for their 30-minute time frame out here. Here, let me give you an example. Last night when I sent out my newsletter to subscribers, this is after the market had was closed down, 900 points or what have you, and it was sent out by 5:45. The message in the newsletter was, don't be surprised to see the market move higher as soon as the equity futures open. Now, the reason is you only see one pattern out here, but there were multiple patterns that were forming at the same time at yesterday's low. And what did the market do last night? It opened up. It gapped up right at the open last night. But that's not the most important thing. The most important thing was that was the easy call. What we then suggested is watch those TD 9-count breakdown levels. Because for anybody that was trading the equity futures that went ahead and got in on that trade out there, they knew that there was clear resistance in the NQ, as an example, at 75.98. Now, let me get my crosshairs out here, just so we can take a look at time. The time when the newsletter was sent out was all the way back here. Well, you're right about here. Okay, right where our crosshair is at. The NQ had closed out at about 74.60 something or what have you. And look at where the NQ got up to at 4:30, 5 o'clock this morning. And then what did it do? It found that resistance and it turned down. Now, look, that was still a gigantic gain out there. And if you would have just been focusing on the numbers and focusing on the percentage, you would have gotten your arse handed to you. I mean, that was the time to go ahead and take your profits out there. It was clear and simple. Now we can see that the ES Mini also got up to that level, slightly closed above it. Remember the 2-bar close? Did we get 2-bar closes above it? No, we did not out here. Take a look at the Russell 2000. Look exactly where it stopped. That is the bottom panel of the screen out here. Look at where resistance has been all day long. It's right up there. So when Jimmy, when you ask me the question, is this dying on the vine out here? Tom's usually talking. The dying on the vine is a volume phrase, so to speak. So really can't be used, simultaneously with this. This here that I'm just trying to teach to everybody is where is support and resistance. And this is a beautiful thing. Because look, when I first learned this, I was taught to just simply go take a look at swing points out there. And not that swing points aren't valuable, because they are. And they're especially valuable in trying to understand where retracements are. And when you've passed a level like the A to B equals CD pattern out there, helpful. But that's not really, and I've proven it empirically, these levels that you and I are looking at out here, 75.98, is that a swing point? No, it's not. And if I had gotten too caught up into the swing points out there, well, then we wouldn't have really been able to answer the question, why did price stop where it did? Now, in the only one on a 30-minute basis that has a TD9 count support level is the Russell 2000. We can see that this morning at 9:30, price broke through that area. And when it broke through that area, and I'd overlooked this when I had sent out this morning's newsletter, but I cleared that up in a following update. When price did break through that area, it found support. And where did it find support? Never ceases to amaze me, although it really does still, even though I developed this thing a dozen years ago or so, it still does amaze me. It's just because it's like, how does that work? Now, where price found support out here, both in the NQ and inside the Russell 2000, another area of support, were the apogee pivot points. Now, these two are not swing points out there. These are specific moment in time to the minute, as to where price is trading when this lunar phase comes in. The next lunar phase will be perigee. That should be in a few days. All right. I don't remember the exact day. But I'm going to guess it's late it must be early next week. But look at the right-hand panel charts on this screen out here, and how important is 7404.25 and how important is 1060.80 for the NQ and the Russell 2000, both of which got down there. And of course, I sent out a quick email and said, basically, if you're intraday type trader, you're short-term trader, support is held, you go ahead and take a long position, but you've got to watch that resistance level out there. Got to watch that resistance level. So this is short term with regard to Peter, with regard to Jimmy, anybody else, with regard to what the markets are doing. But these are invaluable tools to assist you with what the market is doing out here. Now, what else is that we can go take a look at this moment in time? Well, Peter wanted to take a look at the ES Mini out here. So in the ES Mini on a daily time frame, if we pull over the daily time, oh, here, let me show you something that's really amazing. You want to talk about 0.382 retracements? Where did I put that chart? Give me just a second, because this one is like, are you kidding me? Oh, it's probably right here. Probably right here. Take a look at the here. I'm going to open the SPY out here. So if we take a look at the SPY from the high to the low, these are going to be the green lines that you're looking at. So from high to low, the retracement that we saw, the actual high a couple of days ago on March 31st was basically the 0.382 retracement, around 264.41. Now, if we go from the low to the high on March 31st. So we go from that low. This is going to be the yellow level. And you take a look at where price closed yesterday, right on the 0.382 retracement, 246. Now, take a look at that high from the trading session of March 31st to yesterday's low. That would be the blue horizontal lines you're seeing on my screen out here. Where did it stop? The 0.382 retracement out here. Holy shnikes. I don't ever remember being able to go to a chart, especially with this kind of depth from the SPYs 339 all the way down to 218 and see these 0.382 retracements out here. Quite frankly, I'm not even sure what to make of it, other than maybe we're getting our range here that is just simply getting smaller and smaller. We got a caller on the line. We've got call ahead seating. Let's go to Tony out here. Tony, thanks for calling. Thanks for holding. How are you? Oh, hey, Tony, we're about to go to a break out there, so stay with us if you will. Come right back to Tony. I believe we're going to go take a look at Bank of America and Verizon. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Let's go out to Tony, I believe, calling from San Diego. Tony, thanks for holding. Thanks for calling. How are you today?
Yes, sir. Thank you for taking my call. Steve, I've got a question for you. I'm currently holding a pretty decent amount of Bank of America that I've held forever, and I'm not opposed to adding more, but what I've been trying to do is on the lower part of the range maybe sell some puts equivalent to what I would buy if it were to continue to go down, and then selling calls at the top of a range, just trying to pick up some money while I'm sitting here waiting. And I'm just looking for your help on what you think the current range, high and low on Bank of America is, and then possibly the range above it and the range below it to help me kind of know what strikes to sell and buy, etc.
So great. So thanks for that. The level, if you're watching this on Tiger TV, that I would be focused on right now is the center of the screen out here. So I'm going to, and that's the weekly time frame. Okay. And I'm going to go ahead and turn off price just for the moment because it'll be a little bit easier for you and everybody else to see. But there is a brand new weekly profile that formed this week. And the bottom of that box is support, and that's at 1970. And 1970 should be where buyers in this range here, by the way, the range is from 1970 at the bottom to 2670 all the way up at the top. And in the center, the center line is at 2145. So that's our range right now. The reason why I'm using the weekly time frame chart is because it's the only TAS market profile box that we have that price is trading within. And so that's why we're going to focus right there. And the structure of this box is bullish in nature. And what I mean by that, and the reason that I say that, is we know that buyers are lined up at the bottom, or should be. We know that sellers are lined up at the top, or should be. And then what we know is inside this range, buyers and sellers believe that within that range, the fair value is at 2145. So there's both buyers and sellers there. Since there's buyers at 2145, and that's closer to the bottom in 1970, this is why I refer to it as a bullish structured box. So now let me put price back up here and see what we see. What we can see is that last week, the closing high was very close to the 2145 level. So far, what we know this week is that the open, which was right around the 2145 level, has been a real area of resistance. What we also know about this week is that the push lower yesterday and even this morning was a test and rejection of 1970. So you now know where the buyers are hanging out. It's at 1970. Does that make sense?
Yeah, it does. And I mean, I was kind of looking back a few years ago at the supply line. It seems like there was a real big sideways movement for a long period of time between 18 and 19. So maybe with inflation or something of that nature, it's gone up a little bit. But you've reaffirmed what I've been doing, which is when it goes down to 19, below 20, I'm selling naked puts equivalent to what I would add if it closed below, down in that $18 level. And then when it starts to kind of go back up, I'm just buying them back and taking in part of the premium. If you follow what I'm saying.
No, I do. So I do. So let's take a look at what Bank of America has done the last 2 days out here. And so we know that our current low was March 23rd. And as price was making a low, it was doing it with 182 million shares. Now I just rounded up just slightly. Yesterday's gap to the downside and move lower was what we call a test and rejection of that swing point high, which was 1967, with much lighter volume. There was 83 million shares versus 181 million shares. Now, what that's telling you, or should be telling you, is that there aren't as many sellers that are around. Today is another test and rejection of that level. Gotcha. So what it's trying to communicate to us is that the selling in Bank of America may be over, and that you should be exploring that price might move up towards the top of this range. Right now, the top of the range would be about the 22.95 area. And that's how I'd be looking at it. So the weekly time frame. How I've been playing it. What I'm trying to do is it starts to go up is sell, some 2 and 3 week out calls because the premium's been pretty good just to let them expire. Where do you think is a good level right now for like anything in the next 4 to 6 weeks that it wouldn't run through that price? 24, 25, I'd be comfortable that they would just expire worthless if I put them out there because I don't want to give up the shares. I'm just hoping to make some money during the consolidation we're in. Well, the question is, are we really in a consolidation, though? I mean, that's the I am not in that camp yet.
Okay.
That we're in a consolidation. To try to give you an outlook for the next several weeks out here. So my current thinking is, I know that the way that the markets, especially in this type of situation, the type of crash that we've had out here, I know that the way that the markets make the most solid bottoms. And I don't know whether it will, but I do know the pattern associated with what would make the most solid bottom. And if that's what's going to unfold here, then my target would be in the next 3, 4, 5 weeks out here that we're going to see a lower low in the market. And if we're going to see a lower low in the market, well, it probably takes the banks down and everything else down out here.
Gotcha.
One of the reasons why Bank of America may not be done working to the downside, give me a second here to see if I can find my cursor. I'll pull this over here. And again, this is all about trying to identify breakout levels of support or resistance inside of Bank of America. So on a weekly time frame, kind of intermediate term time frame, even though I'm sorry, this is the monthly time frame. So I'm at the larger picture out here. And 2275 is a level that should have held as support. And the mere fact that price closed below that was its breakout level. And that takes us back into July, it looks like, of 2017. And not until price can close back above that level, Tony, would I say that what I'm about to say would be wrong. But if price doesn't close above that, I can easily make the case that Bank of America will pull back to 1205.
Oh, wow.
That's its next breakout area.
No, I mean, I can't argue with that. I that would make sense if it goes below the level you're talking about. I thought if it went below that 18 to 19 level where there's a ton of supply, that brought 12 into play, quite frankly. So I can't argue with your logic there.
It's just the numbers. It's just the numbers and what it's showing. So either Bank of America, so it's got to continue to move higher, get back above that resistance level on its monthly time frame to and so Bank of America here. So Bank of America totally different as an example versus the Dow Jones Industrial Average. So I wouldn't have that same take on the Dow Jones because, see, what the Dow Jones did was it got down and it tested its breakout level of support. And that was at 19,677. Now, I'm still anticipating, even though that level held out here, I still know the best pattern that's associated with major bottoms out here. The kind of major bottoms that are, typically generational type buys. And I believe that is exactly what we have in store for us here in the U.S. Not because I believe it, because all the charts are telling me this. So if the markets do go down lower, 4 or 5 weeks from now, what have you, I'm looking for 17,063 or 15,855 as a level in the Dow.
Wow.
But right now, it's trading above support. So,
gotcha.
Hey, we're out of time. I hope that helped answer your question.
Thanks so much. Thank you so much for your time. I appreciate it.
You bet. You bet. This is Steve Rhodes with TFNN. We'll be right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow up 160, S&P 24 points. Let's go out to Orlando and speak with John. John, thanks for calling. Thanks for holding. How are you today?
How's your afternoon going? I'm doing
very,
good.
very good. Thanks for asking. And Gilead Sciences, is that the equity that you wanted to take a look at?
Yes. I own this at $69, and it's in my 401k, but it keeps it's in the trading range.
It is.
Should I take my profits and just buy it lower, or what do you think about it?
Well, let's take a look at what we know. It is in a trading range. If we just take a look at market profile support or resistance, the range here is basically between 66.57 on a daily basis and 77.35. You're at 75.50 right now. If you're going to trade it, I'd probably wait to see if price could get up towards a 77.35. Now, it's a number I'd write down on a pad of paper because I'm going to be shifting over to other charts as well, and we're going to try to understand where there's some other resistance levels. So this will give you your range out here. On the weekly time frame, price is above the top of the profile, and that means it's broken out above resistance. You know, kind of like when you drive down I-4, used to be around that little Fairbanks curve. It would always be traffic, no matter what.
Yes.
Okay. But once you got through there, you could you could accelerate. Well, so this is a version of the accelerator in the weekly chart, and that's that curve. And so it's above that resistance level to suggest that it might want to move higher. Now, okay, so move higher. We go up to the larger time frame, which is the monthly time frame, to see the price right now is sitting right at resistance, the top of its profile, which is 75.13. Actually, price is just slightly above it, the beginning of a new month. So would I sell it right now? Not necessarily in taking a look at those charts, but let's go look at the other charts as well. So 77.35 would be the area that these charts are suggesting that you might consider that inside of Gilead. When Gilead formed its high out here, that little spike high back about a week and a half ago or so, when it did it, it was price was moving higher, doing less relative energy. On that very day, creates a bearish shooting star. That was the signal that price was going to go ahead and move lower and maybe and test out support. Price was also in wave number 7. That's letter G. Basil's going to be doing a workshop, I believe, in a week or so, and he'll go through the explanation of those wave counts. At wave number 7 or letter G, that's where you can also see a top. So we had two topping signals that went on there. And when price pulled back I don't really have a level of support in the daily time frame to be able to articulate to you why price stopped where it did. So I don't know. Let's go look at the weekly time frame, see what we see out here. The weekly time frame shows us that there was significant resistance at 84.73. So at 84.73, that would be another number where you would consider selling your position. When I look at the weekly time frame chart here right now, I don't really have any kind of a topping signal other than just to tell you where resistance is. I also know that when price was pulling back a couple of weeks ago, where it found support was at 66.71, and that was a TD 9-count breakout level. Let me look at the monthly time frame chart here as well, and at the monthly time frame chart shows resistance at 88.85. So if you were asking me, do I have a reason to suggest to you to sell Gilead today? I don't.
Okay. That sounds good. I think I will hold it to that resistance of 84.70. You said.
That's the large one. But before you're gonna watch price as it should it get up to 77.35, you need to see it close above that to then bring the 80 level into play. It's really kind of one step at a time. So on the daily basis, the issue you're dealing with right now is 77.35. A close above that is the one that says, okay, I'm going to go ahead and make another run for 84.73.
Okay, very good. Very good explanation. Thank you.
Oh, you bet. Thanks so much for calling. Much appreciated. So let me see here. I think I've got some questions, folks, that have come in by email. Let's see if we can get to those here. Tom writes in. He wants to take a look at Nugget. What are the thoughts on gold today? And so with regard to gold, what do we got out here? When I take a look at Goldilocks, right now, price is trading above Stevie's green line. That's at 16.05. So that is bullish or potentially bullish out here. Let's go see what we can find on some of our other charts. What's gold doing in all of the other currencies out here? So that's important to understand. Is gold moving higher in all of the currencies? We're higher in U.S. dollars. We're higher in euros. We're higher in yen, and we're higher in pound sterling out here. Each of these are lower highs, but still higher. No reason to suggest at this stage in taking a look at it that gold is going to move lower at this moment. So let me get my other charts going to look at some intraday time frame charts, because I really believe that, Tom, I know you're more of an intraday type trader out here. So let's go. Oh, I put it on the wrong one. Oh, well, that didn't help me a whole lot, but give me a moment. We'll get the other chart here going momentarily. GC 0620, and I just want to look at the short-term time frames, kind of give you the short-term play-by-play. But so far on the daily chart, and we took a look at gold price and the other currencies, we're not seeing any reason to exit, let's say, the GDX position that you're in. Here, I've got a 30-minute time frame chart. So on the 30-minute time frame for gold, we had a TD9 count pattern that had failed. That had failed after price had gotten above its resistance level of 1624 out here. So this is going to be bar number 6 that we're in. So that says there could be a topping pattern that would form in about so this is 6, 8, 9, in about 2 hours. 2 hours and 10 minutes. So that's going to take you to 4 o'clock out there. But the next level of resistance on a 30-minute time frame for you is 1666. Well, that almost sounds devilish. I always hate 666, but that's just a personal thing out here. But it does look like price is headed up to the 1666 level. The 2-hour time frame chart. Okay, well, I'm glad we did this. So if you want to know where your next level of resistance is, it's at 1642. So if price can clear 1642 out here, and what we're looking at is a 2-hour time frame, that's going to suggest to you that 1666 level would be in play. What's the 4-hour time frame chart telling us? 4-hour time frame chart is telling us 1653 is a level of resistance. So Tom, you're able to write these things down and watch price behavior, maybe watch some volume or whatever it is that you watch with regard to gold as price is hitting those levels. And on the 5-hour time frame, it's 1651. So there is your congestion of where sellers are at. Above 1651 at 1670 for the 5-hour time frame. So, Tom, I hope that helps you out with regard to what gold is doing and then making your decisions about the junior miners and the other miners out there. Hector and the fuel injectors wants to take a look at NBEV out here. NBEV is the ticker symbol. And NBEV's pull back today on extremely light volume provide us with a clue as to a possible pop to the upside. So give me a second here to get back to the daily time frame chart, although things are loading out here for NBEV. So when I take a look at NBEV right now, what we don't like is that we're about to go to break, and then we've got our 2-minute wrap-up. So let me get my head wrapped around NBEV and see what other requests we have in there, and we'll try to get everything fit in before the end of the show. Steve Rhodes with TFNN. We'll be right back.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So Hector's question is today's light volume pullback in Gilead basically a buying opportunity? And as we take a look at this chart, so far, if we take a look at what it's, I said Gilead, I meant NBEV, NBEV out here. And so the swing point low is from the trading session of March 19th, 1.9 million shares there, 113. The actual low today is 113. Volume is about 600,000 shares so far. So it is pulling back on light volume. What I don't know is price going to reject $1.13 or is it going to close below $1.13? From a swing point standpoint, Hector, if price closes below 113, even if it is on light volume, it says, okay, I'm in the swing point. Maybe I want to go test the lows out there, 98 cents. Even if you get a rejection today, meaning it closed back above 113, if you're asking me Would Stevie suggest to you to take a position? Absolutely, positively not. Why would Stevie say that? Well, because yesterday was a close below Stevie's red line. The mere fact that it's red is dangerous. Dangerous from the standpoint there's nothing more bearish than a falling price oscillator below zero. And that is what we have. And today's high, so it's not today's low that's important. It's today's high that's important. And what was today's high? A test and rejection of Stevie's red line out there. I would make NBEV prove it to you. Okay, you're going to test that swing point on lighter volume. I want the rejection of Stevie's red line to see a price close above 120. If you don't get that, I don't think you have a clear signal out there, Hector. And so just keep those hands in the pocket. The last chart we're going to take a look at is the Bitcoin Trust out here. GBTC was the request. With regard to Bitcoin Trust, here's what I'm going to really show you. This is Bitcoin futures, and they're running right in resistance. 74.52 was the number. That is the bottom of its daily profile. That would be suggesting to you, if this is just a counter trend rally, that is where it would stop. If we take a look at Bitcoin Trust, well, it's got resistance level at 806. That's the top of its daily profile out there. I did get a chance to look at the question to see if the individual was long, short, what they were looking for. All I can say is if you're long, you need to see Bitcoin close above 74.52. Otherwise, right now, it's just a counter trend rally. Folks, thanks so much for being here. Stay tuned for 2 more great hours. I'll see you on Fantastic Friday.